I do almost everything opposite of what the pundits say. I invest with the inflation, not against it. It's not what the Fed's going to do, it's what are you going to do? I always talk about the 4 G's. The first G is gold. This is gold, and then this is silver here. Next, I'm investing is ground. I own apartment houses. And then gasoline. Then the last one is food. So I just stay in things that as inflation goes up, gold goes up, real estate goes up, gasoline goes up, and food goes up. So I invest with the inflation, not against it. This here is paper. I don't trust it. The whole system is in trouble. My biggest concern is that inflation is now systemic. And when Powell said it's transitory, that was a lie. When Biden took the Keystone XL pipeline offline, oil went from $30 a barrel to $120 a barrel. That was inflation, not the printing of money. And so this thing here became less valuable. And that's my concern.
Can the Fed handle inflation better?
Well, I always say it's not what the Fed's going to do, it's what are you going to do? And so I always talk about the 4 G's that I've been investing in for most of my life. The first G is gold. This is gold, and then this is silver here. And I stay away from the SLVs or the GLDs. I want no counterparty risk. I want the real stuff. The other thing I'm investing is ground. I own apartment houses. I'm glad I'm not in office buildings or commercial real estate. And then gasoline. Gasoline, the greenies hate the thing, but that's how we fly our planes and stuff like this. And then the last one is food. I invest in cattle and food. So I just stay in things that as inflation goes up, gold goes up, real estate goes up, gasoline goes up, and food goes up. So I invest with the inflation, not against it.
Are certain investment strategies making it harder for the average person to get ahead?
Well, I'm a big advocate for financial education. So in the 1970s, when I got out of the Marine Corps, my rich dad had me take 2 things. I had to learn how to sell, because sales equals income. And then I had to learn how to invest in real estate, because real estate is debt. So most people say, live debt free. I had to learn to use debt as money. And as you guys know, in 71, Nixon took the dollar off the gold standard and the US dollar became debt. So I do almost everything opposite of what the pundits say. I'm not debt free. I use debt as money to acquire real estate, and that minimizes my taxes. That's what I do.
Do you own equities?
I own equities of companies I've taken public. I've taken 2 companies public, one off the Vancouver Stock Exchange via an IPO, and the second on New York Stock Exchange this summer via an IPO.
Do you invest in stocks?
I don't trust anything that can be printed. I like the hard stuff. I am a commodity guy.
Robert, what would your advice be to somebody who might be 30 years old right now, trying to pay an eye-watering sum to get into this house?
Well, real estate's dependent upon jobs, as you know. So I'm a little bit concerned about the number of layoffs coming in the tech industry. So I'd be very careful about jobs. I live in Phoenix, Arizona. That's why Taiwan Semiconductors moved here. So our job market is really strong. So the first thing I say to young people is, I would take a real estate investment course. They don't cost very much.
Is investing in real estate still a good idea with current high prices?
I love crises because when prices come in, prices are low. For example, after 2008, I borrowed $300 million to buy some of the best real estate in the world. But I would take classes on real estate before you do it. The reason is real estate is not liquid. See, a stock is liquid. If I buy Apple and I don't like it, I can sell it that night. I buy a house or something, I'm stuck with it for a while. So I highly recommend more liquid the investment, the more you have to be competent and study and have good teaching.
How do you separate the good real estate classes from the scams?
I always look for the people. I get into fights on YouTube with some of these real estate guys who are promoting what I consider very risky investment strategies, especially in real estate. I'll say it again, real estate is illiquid. This is as liquid as it gets. Stocks are liquid, so you can get in and out. But the moment you go into real estate or you start a business, you're illiquid. And so the more illiquid the assets you're investing in, the smarter you've got to be.